The strategy I'm about to show you has made me and thousands of my students real consistent money in the markets. But right now, with how fast things shift, especially in these Trump markets, timing and confirmation is everything. So in this video, I'll show you how I've updated my favorite strategy in 2025, the moving average pullback. You'll learn how I use this step by step to catch clean entries, avoid fake outs, and really ride some trends, even in all this chaos. And if you stay with me for the next few minutes, I'll break down how to use this on both longs and shorts with real trading examples you can screenshot and use today. Now, markets feel like nothing like they did a couple years ago. The volatility is so sharp. The moves are faster. Algos, HFT, and most importantly, AI are in the works. And if you're still chasing breakouts, you're bleeding slowly without even realizing it. The old adage of just drawing squiggly lines on top of your charts, it's over. New things are working, and what we're doing is trading with the computers, with the AI, and using strategies that are based on not breakouts, but pullbacks. I've seen traders wiped out in a few weeks because they couldn't adapt. Being adaptable is the #1 key for all traders, and I don't want that for you. Let me tell you a little bit about why this strategy works, and it might be the best strategy you do. It's simple, it's clean, and it's profitable. I'm gonna show you how I crushed CRCL, Circle. This is a stock that is responsible for issuing stablecoins. And a couple weeks ago, there was a rumor out that stablecoins were going to get some type of approval from the federal government. This stock is an IPO, and it's had tremendous amounts of strength. Just tremendous. That's so extra Trump right there, right? But no, seriously, IPOs have been super hot this year, so it's my core focus in some days. CoreWeave, CRWV, Circle, CRCL. Webull, when Webull went IPO, it went nuts. $10, $80 plus. It's been nonstop. And so Circle, I've been circling it, literally, pun intended, on my board for when this news comes out. It finally came out today, and I've been using this strategy on this stock every single day for literally a week. So let's get into it. So folks, I have literally made $22,000 trading this Circle. I'm going to show you all my entries and exits on TradingView and how I would trade it. And then I'll show you the real executions because, of course, I goof up a couple things. But I want to really focus in on this pattern. It is a pullback to moving averages on an intraday basis, but you need a big picture catalyst. You need a big picture run, right? You'd like a big breakout. So first of all, IPOs have been hot. So this stock IPO'd at $60. And the basis of what I was trying to do is, look, if you see CRWV, right? We've been trading this one. Look at the price from the IPO to where it is at, right? And like a lot of the crypto IPOs, like a lot of times you think like, the crypto stocks are kind of dumpers, and they are. But like if you look at Webull, right, it went from $10 to $80, right? And so IPOs in these crypto names are hot. IPOs are hot, SPACs are hot, but also, right, crypto things are hot. Even though you're not seeing a lot of movement in necessarily crypto stocks, like Bitcoin, Ethereum, they're kind of farting around a little bit, but crypto stocks have been hot. And so I had a thesis. This year in 2025, IPOs have been hot. If you look at any top gainer in the market, like the real big ones, they've all been IPOs. And so I want to be a part of these IPOs, right? And so I've been looking at these IPOs every single day. I have a IPO list. I watch IPO tracker, and I'm always putting them on a list. And they've been just ripping nonstop. And so then what I've been doing is this intraday pullback strategy to nail down these IPOs. And so I had a thesis on this one that this news was going to come out on the stable coins. And so then I wanted to actually come about and do this strategy on them. And so let's get into this. Guys, so if you see this right now, this stock IPO'd on right here. So this was the IPO day. It was at about 60 bucks. It had a crazy run on the IPO. Now look, I don't take guesses. I'm a trader. I'm an Indian. I'm all about probabilities and math, as you guys probably know about us, right? So the day of the IPO, there wasn't much I could personally do about it. But the next day, I want to use the strategy that we're talking about right now, which is buying pullbacks on these trending names, when they come back into the bone zone. So the bone zone is the area between the 9 and 20 EMA. You don't know if it's going to stop at the 9 or the 20. What we like to do, and I love to do this on the first pullbacks especially, but what I like to do is I want to see this thing pop up in the mornings. And then when it pulls back into the bone zone, when I get a green candle to hold, that's essentially my confirmation candle. So when I get the green candle to hold, now I'm into this stock and I can ride it to the upside based on all our different setups that we like to do. So I enter over here and then it starts to push. And we have also an ORB pattern right here. Now this pattern is really important because ORBs we talk about a lot, but it also happens to coincide with this previous day's high too, right? So not only do you have an early entry, but you have a secondary ad spot right here where what I personally like to do is I always sell into resistance. I sell a partial right into this. And then what I do is on confirmation, I just re-add that spot. I know it sounds a little bit silly. Like, why would you sell into resistance and then buy it back 50 cents higher? How I want you to think about it, it's like car insurance, all right? You can drive for years and you never get in an accident, but you still pay your car insurance, right? For that one time that maybe something bad happens. I've seen stocks get rugged thousands of times, if not tens of thousands of times in my career. So I know that that rug is always around the corner on some of these names. So I want to sell into the resistance. Now, what happens is if it breaks through, I'll reload what I just sold. And I paid a 50-cent insurance or maybe $1 insurance. And so like, that's what I essentially did. I'm selling in here and then I'm kind of rebuying it at the same candle. And I know it's like, well, why didn't you do this or that? I totally get it. But once again, it's just insurance. All right. And so the first entries into this moving average pullback. Now, this is the key for trending names. When you get a big pull, so like, see how like this stock explodes? You want to scale out into this. Like you kind of want to scale out every couple bucks into this. You know, this is a new IPO, so you can do like every $2, you know, have something in your head. If it's like a stock like NVIDIA or Palantir, I will literally sell like every $1, a little bit. And something like this, because it's going to be more explosive, you know, maybe I sell like every $2, $3 and I'll watch the price action on it. But the key is this. So as it peaks out here at like 120, what we do is like, as it starts to pull back, so watch this thing. So it's pulling back. Now it pulls back to the 9 EMA. See this here? You can't buy the 9 EMA there. The 9 don't shine midday, all right? The 9 EMA is great in the first pullback. The second pullback, you need the deeper pullback. So you pull back into the VWAP and you're still into the bone zone. Guys, that is a super support. You have the bone zone. That's that shaded area between the 9 and 20 EMA. And then you have the VWAP right here. So now like what's happening is you've got multiple levels of support coming in under the kitchen, right? So what I do is I wait for a green candle to hold. So I'm going to be purchasing somewhere into this candle. Closer to the VWAP, the better. Sometimes people will scale in, but I'm more of a one shot, one kill kind of guy. So like once I get confirmation that it's holding, like I'll let it test the VWAP, and then once it holds an MA, I'll add. And then now I'm into this thing. Now look, I'm a piker by nature. Even though like, you know, theoretically you should be selling probably up here, I will always sell some into the first spike if I get half the distance between price and the high. So if I get up here, I'm going to sell some. So I took some off the table half here, and then it started to just kind of trend up its 9 EMA. And so then I'm scaling out into these spikes. A lot of people would add right here. But guys, that's not the opening range breakout, right? It's a flag pattern, sure. but it's a loose one that's on an extended stock. That's a liquidity trap that you have to actually stay away from. I want you guys to get used to buying low, selling high, right? You don't want to be the last man to the gangbang. It's fun, but you can't do it unless you just got out of prison, right? Like, we want to be first or we can be second, but we can never be last. So this is where you want to be using your MAs. So now look, you got to test into the 9 EMA. Then the second round, you got to test into the 20 EMA. So now what happens? You get into the day. Can you buy at the 9 here? No. Can you buy at the 20 here? No. You've already used those tests, right? So once you use the 9, then you use the 20, and the stock goes up that much, you've got to actually be really prudent and wait for a deeper test. Something like the 50, right? Or something like even a little bit deeper than that. But like, don't be greedy on this. Like the 9 don't shine midday, and it definitely don't work end of day. You want to use it in the morning. And then the first kind of pullback that's a little bit deeper, you can come to the 20 VWAP and so on and so forth. So this is just a very, very simple way to use your moving averages. Now, this is the thing. You can compound this. Remember what I told you? I had a thesis of this name based on the daily chart because it's an IPO, and there was some news coming out that the US government was going to vote on stable coins. And so we had a fundamental catalyst. Then I had the charts, right? The bone zone, then 920 EMA. So I had in things. So I want to keep trading this nonstop as it starts to go. So check this out. The next day, this was actually a little tricky thing. I thought maybe I would go for like another day, right? And so the stock gapped up here huge. Now look, in hindsight, I think maybe this gap was too big. It was 30 points, right? That's a big gap for a $100 stock. But when it pulled back into this bone zone right here, and I got the green candle to hold, I actually added here. And I ended up taking a very small loss as it broke under the 9 EMA. Guys, that will happen. I take losses all the time. I eat losses for breakfast. I ain't afraid of them. I'm streaming live on Zoom all day, every day. I take losses in front of hundreds and hundreds of people, sometimes thousands of people. I don't care because a loss just gets me closer to the gain. So I add into this and I took the loss. Very small loss, couple points. Okay, no big deal. This happens, all right? But in hindsight, what could I have done different? Probably this gap was too big, right? I think so, yeah, right? Like, I got excited, whatever. But I lost 2 points. So I made a bunch of points the first round. I lost a couple points the second round. Now, the next day, and I'll show you all my executions on this in a little bit. So the next day, same type of deal. The stock spikes up, pulls back into your VWAP area, and then it pops up. But now look, in the morning, I'm looking for pullbacks into the EMA. So like I leave this alone. A lot of people would have added that VWAP. That's not my particular cup of tea. But when you come back into the bone zone, you get a sharp, so it's 115, you pull back all the way to 109. So when you come back this much and you pull back into the bone zone and you get that green candle to hold, this green candle right here, I'm putting my stop under my 20 EMA. Boom. This stock spikes up. You're going to sell some off the table. It pulls back right into the bone zone. I reload just a half size because I sold a half size. So I'm going to reload a half size. And now I got a big trend. And what I'll do is I'll ride up the trend as long as it's holding up the 9 EMA. I'll always scale out some because I got to take some income, right? We're in the business of taking income. This is not an investment. This is a day trade. So I want to be taking some off the table because it is about income. So I sold off some into this candle over here. And then I wrote up the rest, and when it broke under the 9 EMA, I got out. That is my style. I sell half, and then I'll write up some. And if it keeps trending, I might even sell a quarter, but there's not much else to do. So this is, once again, just a nice, easy, happy-go-lucky pullback. And guys, stay tuned. Like, this is like something you could do on a trending name. So like, remember back I did with like NVIDIA trended for like 2 months, or SMCI trended for 2 months. You could do this setup like that. You can just sit there every day, watch a handful of stocks that are really, really trending, and then do this setup. Like, you don't have to watch a million stocks and do all of that kind of fun stuff. Now, check this out. This is so clean. So then the next day, the stock's not really doing much because it's got to take a rest. That happens. But once again, what I'm always looking for is a morning spike. So like, see the previous day, there wasn't really a morning spike. It had a spike down. So when it has a spike down, I'm not trying to do the setup to the upside. If anything, I'm doing the setup to the downside. Now, this is an IPO, so I don't have borrows on this because it's just an IPO. But theoretically, like if it opened down, I would be shorting into these spots, to play to the downside. But my overall thesis is what? That it's going to go up. So I'm not really interested in that. So when it opens down like this, if the first candle is a big stick down, then the stock is off my watch list for the day. I move on. I have so many other names I'm watching. I usually like to watch 6 to 12 names, and so I'll find something else to do. Now, this is picture perfect, all right? So the next day, stock opens up. Then it starts to pull back. See how like it just gets a green candle here? Don't fall for those damn green candles. Don't fall for those green candles, guys. Let it pull back into the bone zone. See how I would buy it at the 9 if it held, but there was no green candle. I'm waiting to see where it holds, and then I'm getting the green candle, and then I'm adding. So now I'm into this candle here. And dude, this is where you're really rocking and rolling, right? You always want to sell some into a spike. If you get 3-to-1 reward or risk, sell some. But also just use a little bit of common sense. Like, look, in the trading day, you're not going to sit there and be like, oh my gosh, I got 3-to-1, 4-to-1, like, right? You got to have like some mental areas, but you really got to also just sell into the spikes, right? Like you got to get used to that. If you're a day trader, you're trading for income, nothing more, nothing less. So now, boom, 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 boom. You can ride this thing up to MA. It goes till 12 o'clock. Like you could sell some and then you take some for lotto. That's what I did. I sold some right here at 116. I sold some at 121, and then I got out when it broke under the 9 EMA. So like just a simple setup. Now, you can see the next day, right? So the stock is trending. If it's trending, I want to keep doing it, right? So the next day, see how like spikes up, but it doesn't pull back to the EMAs while the EMAs are curling up. This is a very, very big damn nuance that people don't talk about that's so important. So it comes back to the EMAs here, but the 9 EMA is like pulling back now. Like that's not what we're trying to do. We can't do that. Once the 9 EMA is going down, then the short-term trend is down, right? So we got to leave that thing alone. I got to stay away from that. Like you have maybe a test into the VWAP here, but it wasn't a clean test. It never actually tested it. So this is just a leave alone day, and so this is like something you just kind of just let it sit alone. Now look. The next day, you see how it spikes up and then it pulls back into the 9 EMA. But see how the 9 EMA is also curling down? It's not orderly. Like, see the structure of this? How it's pulling back versus how it did it here. Where you spike up and you orderly pull back, right? Like you orderly pull back. It's a very, very different structure, right? So like you leave that alone. It's too sharp of a pullback. Now, look. That was yesterday. Today, the news comes out. The stable coins are for real, and boom. Like you get the spike up and you get all of this. Now, look, I had to stay out of it on this particular day. I added on this particular flag here, but I did not get any pullback trades. And I feel a lot more comfortable when I get the pullback trade. And so what I ended up having to do was like, I took this flag, but I ended up selling it for like 2 points because I was waiting for the damn pullback the whole day, right? And you finally got one over here, but it was midday. And so I had to leave it alone. Now, I know I said 9 don't shine midday, and it normally doesn't. This was so much heat that it kept going. What can you do? We can't always make moves for every single small nuance. What I'm looking for is rules that fit like 90% of the time. So the 9 don't shine midday. It did this time, but I can't make a system for when the 9 EMA works that one time. And so you just got to leave it alone. And so this is where like we all got to be just like super careful. By the way, if this is starting to click and you actually want to practice this stuff with us, check the link below. We have a completely free trading course that walks you through all the different trade phases, setups like this one. We're talking about the risk, the psychology, and the management of all these trades. Plus, you're going to get access to our free Discord community where I go live and trade 4 times a week. No fluff, just real-time learning in the markets with traders like you. Now look, this strategy isn't just for longs. It's also for shorts. Guys, you have to be multidimensional in this market. With Trump around and all this just hoopla going in the markets, yes, we are in a bull market and the bull market has been fantastic. But we have to always be prepared to do some level of shorts because the market may dump, it may pop, and yes, we're in a trend, but there have been juicy opportunities to the short side. So let's talk about even the short side, how you would do this setup. So when you're looking at this setup, right? When you're looking at this bad boy, what you're looking for is a stick down, right? So you get the stick down in the market and that pop into the EMAs, you're going to look to take a short when you get a red candle to hold, and then you push this thing to the downside. Very, very simple. Then look, as long as it's before 11 o'clock, if you pop into the EMAs, when you get a red candle to hold, then you can take the short again and you play it back to the downside. Just a very, very simple setup. Now look, you can do this type of trade even in the midday. Remember when Elon got in a big pissy fight with the Trumpster and he's like, hey, you're a pedophile. And Trumpster's like, yeah, so what? And they go back and forth, right? And, you see this stock and it's like kind of just hanging out all day and then boom, like it's at this MA here, the 50 MA. And it's like no pullback into the bone zone per se, right? But what happens is when it breaks under the bone zone, you can start to watch it. And so you start to get this like kind of cool pullback into it. And the thing is like, you may have to miss some of this, right? If news is out, right? Like Elon's in a fight with the Trumpster. So now what happens is if you pop into the bone zone, even if it's end of day, because there's news out, you can take the trade into this and it'll give you the first opportunity to play into this flush. So you never have to get the FOMO, guys. Like this stuff happens. You'll miss some of the move, but you're going to get a majority of the move because it's not how much of the move you get. It's how much of the move you get versus how much risk you're taking on the trade. If you notice here, like if you take this trade here, what's your risk? Like $1, maybe $1.50? Like nothing crazy. And that's where we really want to be on this. Look, there's some common mistakes to hold when you get these, right? Number one, just entering too early before you actually test into the zone. That's going to be big, right? Number two, don't use mental stops. Guys, I've lost hundreds of thousands of dollars in my life thinking I'm too smart for the market and just using mental stops because I don't want to admit defeat. Don't do it. It costs you so much money. The market makers aren't going to take your stops. Don't worry about it. And then, of course, remembering that the first and second thrusts are really the most powerful. You can make an exception if there's midday news and treat it like a fresh trend if this news came out midday. But otherwise, the first and second thrusts are really, really the best spots. And then, of course, always remember like the higher time frames and having a big picture thesis. Remember how like what I was telling you with Circle? I had a big picture thesis on this, right? There was news coming out. And then there's a huge trend in IPOs this year. And so like there was a thesis happening that I think needed to be really done. Now, the big difference between this year and other years is the volatility. Even though we're just kind of chopping around right now, we had in the beginning of the year a big flush and then right after a huge run. The volatility has been huge and the market punishes indecision. So why does this all matter? Obviously, the Trump administration policies are affecting kind of the global, global feelings. I don't know. Presidents are president. Trump is not that different than Biden. Biden wasn't that different than Trump. And, Trump wasn't that different than Obama. But, the feelings matter sometimes, right? And so we're affecting macro risk. We're getting spikes all over the place with news-based volatility, and you're also going to get some fake outs in this current market because now we're extended. The easy money and the bounce has been made, and so you got to be mindful of that. This strategy will allow you to wait. It's going to allow you to breathe and enter with structure at the right place, the right time, but with your darn risk managed, right? So that you can trade with the wind at your back. It's like surfing in rougher waves. Like you don't just dive in blind. You wait, you gotta watch that rhythm and you enter when that wave, that thrust, it supports you, and I think that's going to be huge. So look, guys, if this video helped you and you want to actually apply this live, check the link below. Guys, this is like a no holds barred free community. You're going to get access to our completely free trading course where I walk you through the full trader journey, no fluff, no gimmicks. I'm going to show you how to analyze setups, manage risk, master entries, and stay consistent. And when you enroll, you're also going to unlock our free trading Discord. This is where I'm going to go live 4 times a week, break down setups in real time, and you're gonna get to trade alongside our community. There's a bunch of really solid, good people in there. This is where traders stop guessing and start executing. So the link is below. Guys, I will see you on the inside.